For almost 25 years, there's been one rule, one single rule, depending on which way you want to look at it, that has been saving investors or absolutely frustrating them. What rule is it? It is the pattern day trading rule, and it is about to go away. And it will have an impact even if you are not a day trader. But what is this rule? How does it work? And why could it have an impact on everybody? Let's go ahead and break it down. First, let's start off with what a day trader is. These are the people that, for the most part, lose a whole lot of money. Okay, they buy and sell the same stock within the same day. Now, I'll put the rule here so I don't, so you can read it in case I say it incorrectly. That does happen from time to time. But essentially, you are making too many day trades within a short period of time. I think it is more than 4 day trades within 5 business days. I think that is correct. You can see it on the screen. Okay. If you have less than $25,000, you can be flagged as a pattern day trader. Your account can be locked and you can only sell. That's it. That was the rule, which is set to change. Why can that be a bad thing? And then what are the pros? First, why was this rule set in the first place? I think it's always important to talk about history. Started in 2001. What happened in 2001? No, not that thing. What happened in the stock market in 2001? That was the dot-com bust, 2001. Because of that, a part of the reason, other than a lot of these, not so great companies popped up, but there was a lot of volume at that time and a lot of people buying and selling and buying and selling. Companies couldn't handle it and people didn't know what in the world they were doing. So what the federal government did at that time is said, look, let's put limits on this. Let's create this pattern day trading rule to protect people from themselves and reduce volatility. That's pretty much what it did. And we started to level off in terms of the stock market falling apart up until 2008. So it didn't prevent everything, but it did help just a bit. Now, the downside is it fair that if you don't have $25,000 that you can't day trade? Depending on who you are, the answer is yes. Because there are some people that feel that they can be very profitable despite all the data. Close to 90, almost 99%, depending on what data set you're looking at, of day traders do lose money. But this is a free country for now. And you should have the right, I guess, to lose your money in any way, shape, fashion, or form, even though I'm not someone who would recommend that. I also recommend and like seatbelts. Okay. Now, should there be a law telling you that you shouldn't have to wear a seatbelt and seatbelts should be optional? I mean, this would be around the same logic. However, money and seatbelts aren't the exact same thing. So it's not the perfect analogy, but you guys get the point. I have had people, even back in the public days and via my email, send me, several paragraphs around why I should fight against this rule and tell the federal government that they should get rid of the pattern day trading rule because they don't have $25,000 and that they should have access to day trade without that much money. And I'm someone who does believe in access. I do believe that regardless whether you have 500 or 10,000, you should have the same tools. You should have the same tricks, the same tools to be able to do that without having that much money. So that part is fair. But the thing is, will that volatility hurt us all? That is what I am concerned about. Once you take this guardrail away and everybody can buy and sell with no limits to how many times you can buy the same stock and sell the same stock based on whatever is happening, is that going to hurt the stock market? And is it going to hurt you, the consumer, as well? What do I mean by this? Number one, what is volatility? Remember these ups and downs that happened back in the pandemic. Stock market up 1,000 points. Best day since 1933. Stock market down. Worst day since 2008. These were things that happened. Well, now you take away this rule, it is possible rather, to start to see these things again. That's number one. But also, who does this benefit? Anytime these things happen, you have to look around and say, who does this benefit? A lot of these free apps, Robinhood being one of them, remember there was an issue with Robinhood back during the pandemic, is based on payment for order flow. That means the more that these apps get paid. How does this work? I'm going to do a super quick definition. I'm not going to go into the weeds. Basically, you put an order, it goes to Robinhood. Robinhood sends it to a market maker. These market makers pay Robinhood money when you send it in. And what they do is they make what is called a spread. So if you want to sell a stock for $10, what they're really doing is giving you the stock for like $9.90. And that 10 cents is what that market maker is doing. You do that times 1,000,000 trades every single day. That is how these market makers make money over and over and over again. Now, if I just so happen to lobby and get rid of this rule that you can trade multiple times in a single day, who do you think that benefits? It's going to benefit Robinhood. It's obviously going to benefit the market maker. This is not a conspiracy theory. I ain't making it up. These are the facts. Okay, that is what payment for order flow does, and it's how these companies have been making money this entire time. There is no such thing as free lunch. Yes, free commission, but how do you think they've been staying in business anyway? Okay, somebody has to be paying somewhere down the line. That is why. And allowing people or incentivizing people to trade a lot more is going to get somebody paid somewhere. So be careful of that too. And I have to say that this is risky, okay? I have not, never have been, and perhaps never will be an advocate of day trading. Yes, there are some people who have done it successfully and get in and get out every now and then. I'm not one of those people, and it is very, very difficult to do it consistently over time. That is the hardest part because there's always the risk of the unknown. That is the thing that you have to fight against being a day trader. Yes, you can have the right stock. Let's say Netflix, okay? You got Netflix, you know Netflix, or you feel like Netflix is going to go up. However, it can be a surprise announcement. Boom, tariff happening. Boom, somebody getting laid off. CEO getting fired right in the middle of your trade. Boom, trade gone. You lost money. It's stuff like that that can absolutely blow up your account and mess up what is going on. There's so many different things in the day trading process that most people just don't have a true system for, that you're just not equipped for either. I prefer and would advise people to have what is truly working. For example, Fidelity came out and said they have a record number of millionaires in 2025 and more than 500,000. Those are all 401k millionaires. They didn't do it by day trading. You're not going to find that many day trading millionaires. Look at the wealthiest people in the world, ain't none of them day traders, right? You're not going to find a whole bunch of them. So what is the most popular, highest percentage way to get to financial freedom? Look at the list. Day trading is not there. Okay, it's just not. So why do it, right? And why dedicate that much money to it? That's my case. So if you want to know other ways that actually work towards making money, as well as stocks that can help you to make money as well, then this is the video that you want to check out next.